Today is 11 a.m. It is February 14th, 2023. We're looking at EU. Here's my high time frame outlook. On the charts in front of you, you've got the 1 hour on the left, 1 hour on the right. This is how I do my charting. I have my buy side drawings on the left, I have my sell side drawings on the right, but they are identical charts. We have woken up to this. We've initiated beyond this range and beyond this, forming this primary, this biprimary. But really what's going on is we had this biprimary in here that we were mitigating out of. We were mitigating and we pushed it down to lower prices. We then mitigated something on the buy side, zipped all the way up, took out this primary, which we often do, and then we've initiated away. We're initiating short lower prices. So I'm short. My bias is short at the moment on the lower time frame based upon what I'm seeing. So the next thing to do is to see, has this primary activated, right? So we know, I'm on the buy side now, we know that this is a buy primary, meaning it's taken liquidity from somewhere on the left that's already ranged, initiated, and broke structure. It's then formed this, but doesn't activate until it gets a break of structure from some major swing structure. Now, is this enough of swing structure? That's what you've got to be asking yourself. My opinion is we'll get a reaction regardless. This order block here, this big buy order block, will get a reaction of some sorts. It's just how much and when. These are questions we don't have the answer to. Anyway, so we've had that the initiation up, we've taken liquidity, and then we've showed new intention potentially. And so this sort of crazy bar here, what was it, 5 a.m. So it's just a news shake up, right? They took liquidity from both sides. And what's happened after that is we've started breaking structure to the low, to below, down below, right? We're taking liquidity from the lows. Now, again, is this a mitigation here to take us to higher prices? For me, I'm not seeing anything that's significant. So as we observe, like what's this mitigated on the low side, we'd have to look into what this is on the lower time frame to be able to decide whether or not that's worthy of a mitigation, or if it's likely to become cause, meaning likely to become liquidity. So that's kind of where we are right now. I believe we're initiating lower prices. I don't know where we're going to stop, but I would like to see us stop in a buy primary. And I can't see any on this page on this time frame. Absolutely no buy primary, right? So we're going to have to go to a lower time frame to see what's up. And so if we zoom out, we can see the mitigation, and this was at the time when I very first got to the screen. We mitigated a 15-second buy primary. And I've written in brackets my nemesis from yesterday, and I want to explain that immediately. Actually, that's the first thing I want to talk about. Um, and so, if we've mitigated a buy primary, right, and we've initiated higher prices, that's a good indication that that could be the low. All right. So even though we're trading and transacting over here, and I'm currently in a short, running short, and I'm hoping price does get down to down here, so I get taken out for 10R. Even though that's going on, we are initiating up and away from a buy primary. And if we look over here, what we've mitigated and initiated away from, we've mitigated a high time frame sell primary open, which shows up as a 1 minute buy primary, which caused the initiation. I can show us what that means in a minute as well. So suffice it to say, we've got buy primary mitigation and we've got another sell primary mitigation. So we're caught between two worlds, and we should be playing both sides, absolutely, because we just have no idea. But we do know a high and we do know a low, and we know that these can be respected. So as soon as these have this one broke here and broke out from that, broke below that primary, it's still within the same primary. So I'm actually going to just move that there, same primary that's inside, but the difference is it's actually touched the last known range now. So it's either starting to mitigate that, it's creating cause, or that's where it wants to go. And for us, and the way we trade, we always look for these because these are ideal entry points. These are places where we look for reactions, basically. And so as price is initiating low, this is really good for my trade. I haven't been taken out just yet. We won't know. Let's just watch it and see. Still not out. Still not out. My broker hasn't binged my phone yet. Be just nice to see it, wouldn't it? Live on video, just to watch it go. We'll just give this a couple more seconds, and while that's going on, and we can watch it on the right hand side of my screen. On the left side of the screen, I'm going to go talk about this nemesis from yesterday and what that means here. So we're going to actually go to the 1 minute chart first. And yes, I left all these drawings on purpose because this is where I got hung up yesterday and had some basically I wasn't my mind wasn't in the right place, and I wasn't able to take longs like this one. These are all hindsight longs, by the way. Every entry on the left hand side screen are now hindsight. I did a video yesterday with all of this, and you can see quite clearly that they're no longer hindsight. Like you'll see on the video that the trades I actually took and didn't take and whatnot. But these are all now hindsight. And so what happened was it was this one range here. Let's just see if this takes. Come on, my gosh. Let's just do it so I can free up our brains for other stuff, you know? I'm just looking for a push down, literally to where my mouse is. If we can get pushed down to my mouse, my broker will have cashed me out. Put it that way. They'll hit spread, and I'll be taken out on that one. I almost feel like if it doesn't want to go now, I almost feel like I might just close up my phone, just literally just so we can keep talking. I don't have to think about this one anymore. Like I don't want to keep looking at it, you know. So we'll just give it a few more seconds, maybe a maximum of 1 minute here. See what it does. I'm gonna get our broker up and see if we can't. Um, See if we can't close it. If it's not gonna go, I'm almost certain it'll go. It's just this bad place to be. Anytime you say you're certain of something, bad fucking place to be. I'm not certain of this one actually. I'm not certain of anything. All right, there we go. Done. Boom. Just got it. There it goes. It shows it on my broker. Cool. Okay. Done. 10R. We'll talk about it. It says 8.33, but it was actually I did take a 1.5 pip on this, and with my fill and everything the way it was, this ended up being a 1.8. So what it means is it while it is 10R for sure, it's just that my broker had entered here, put the stop higher than I wanted it. Actually, not higher than I wanted it, but I was going for 1.5, and I ended up getting the fill and everything else as a 1.8. And yet I entered with the correct amount of units, meaning that this is a 10R take profit. It was just my stop loss, instead of being 1% stop loss, my stop loss was like 1.2% or 1 point, a little bit over. So that's all, just a little additional risk on my side, but the exact same take profit. So I'm happy about that one. Anyway, so now let's talk about this nemesis of mine that I'm talking about or I've been mentioning. So this was yesterday's price action. And I wonder if I should just get rid of all of this. So here's a buy primary, just for a second here. We're just going to use my mouse. Here's that buy primary. And I'm looking at this range right here as where I wanted price to come back to. Price then created this and initiated higher prices. Now, I was at the screen watching this. I didn't enter here because I wanted price to come back down into here. I wanted price to come back down into my primary rather than into this range here. And so it was this that held me up the entire day, because once we initiated up here, we never ever had the opportunity to come back into this buy primary, which I was always waiting for. I always want to take longs out of a buy primary, or an initiation modal that has come from a buy primary. Okay, so with that in mind, what happened here was I only saw this as a range. Okay, just a regular range. Now, even though it's connected, it didn't really matter. Doesn't matter to me, because, and this is what threw me off yesterday. I'm looking at things in hindsight last night, and trying to figure out what the hell happened. Why wasn't I able to see what was going on, or why wasn't I able to see and understand this fully? Because I did feel a little bit like, a 10th grader again. Like, oh shit, like, why is my stuff not working? Like, why is my understanding different now? Like, or not different, but why isn't it not showing up with um, a true understanding of what was going on. It was almost like trying to make things work. And so I never entered here. I didn't get any of these entries here. And well, I want to talk about them real quick. I know I'm going to spend some time talking about a different day, but it's going to be, I hope, worth it. Okay, so here's my nemesis. My nemesis range was this little guy in here, and it was only viewable on the 15 seconds. So on the 15 seconds, here's what's gone on. So we've got this sell primary turns into a buy primary. All you really need to know is that this was a buy primary, initiates away, right? And now I'm thinking I want anything to do within this area, right? Because it's a buy primary. But this range was sort of hanging me up. Like, what's its purpose? Obviously, to create cause, right? And what it was on the 15-second chart, you can see it. I couldn't see it because I had a 1 minute open, and it was a tricky candle, but it was this one black candle right here. What does that represent? Right, we're pushing up one black candle, and then they initiate higher again, and so it's a pause in price, a range. I would have liked to have seen it been an inside bar for sure. Instead of making a new high, it looks like it made a new high. And so what happened is we paused here, we ranged right before the initiation, the break of structure. So we range, initiation, break of structure, comes back in, takes the liquidity and initiates, breaks on itself and breaks up the structure. Boom, boom, boom. Under all conditions, under everything that I know, that is a buy primary. And so now I understand that's a buy primary. In fucking hindsight, I'm mad at myself because that messed up my trading day. And it's okay. It's okay. I'm glad I make mistakes now rather than like when I'm managing millions of dollars. But for right now, it's okay to make mistakes because I am in a learning mode. I'm still learning how to implement SMC and how to make this all work for me. And I'm coming up with my own strategy and understanding of how it all works. I'm putting it all together. And so primary ranges, liquidity grab ranges, you can call them whatever. I call them primaries. It's just sort of a coin I've termed. But these primary ranges are absolutely invaluable for understanding price action. And so when we have this as well, so buy primary and buy primary, I can play off this all day long now. And so that was my missing piece of understanding from yesterday. I just didn't understand that that was actually a buy primary. I thought it was a range. And that action right there messed me up for the entire day. Now, real briefly, we'll just talk about these because we have got them up. Okay. So buy primary right here. Basically creates a sell primary into a buy primary. We're left with this slither of price action here. Price initiates up, up and away. Actually gives a retest, breaks out, comes back down. Could have taken it, gone long. Right now, if you'd have taken that and had balls of steel not to go break even, you would have got a 10R. Okay, but that wasn't the best trade. That was an okay trade. As we move along and we're sort of understanding, now I'm not getting into anything yesterday. I wasn't really interested in the longs because it was they weren't hitting right. I was waiting for down here. I was waiting for price action to come down here, and so that's why I was kind of getting in weird areas and wasn't really doing what I wanted to do, trading how I wanted to do. So as price comes back down, we know that this is the buy primer. It's formed, it's broken structure, all the rest of it. So we expect it to hold. And in here is the range, last known range that was created before the initiation away. So we'd expect a mitigation here, right? So we'll be looking here to find an entry modal, right, to give us an inside clue that we can get into the market. There was no initiation pattern, no modal, right? So no buy pattern showed up here for us and in the way I trade, right? So no initiation, no problem. Okay. Then there was one here, but no problem because it was a transitional order block. Look at what we mitigated, right? So you don't want to be taking a buy, a sell, and then a buy primary forms. Sure enough, there's this little slither here. We could have been entering here, but nope, you've got to watch out for it. Do not take it. Transitional order block. Price mitigated something through price here, and mitigations like that almost always become transitional and liquidity, and so we were expecting to take it. Whew. Keep going. Then they just take liquidity from above here, and this is where we actually get another entry, right? So they take liquidity from up here, making a sell primary. The sell primary would activate down here. A buy primary forms. Price does not break this low, meaning that the sell primary does not activate, and instead we're left with this area here, which is a slither, I guess you could say, but an area of price action where price is unwilling to transact in. They spend a little bit of time and then initiate away. So this right here is actually an entry possibility. And the trade idea at that time would have looked like, this, quite literally. Nothing special, just going for a break of the high, maybe even a break up here, right? So nothing I would have ever taken. The stop's too large, and so but the understanding's there. So we know that we've got this sort of area which hasn't been mitigated. It's wick, they've spent a lot of time there and initiated and broke structure. And so as they come in, they've done this all over again. But this time, they've done it differently. They've done it with higher time frame, not higher time frame, higher bars. Let's just say bigger price movement. So they initiated price up fast and aggressive, initiated price back down fast and aggressive. And it's the same thing all over again. A sell primary formed, and then it breaks on itself, meaning it's formed, and to activate it, it needs to break swing structure here or here. It never breaks structure. Instead, a buy primary is in the process of formation. It takes liquidity from back down here and then initiates away. There is absolutely no reason ever for them to want to continue transacting down here. This is all wick. This is that slither, right, of price action that is still available. And what happens is price initiates up and away, comes back down, and takes us in, right? And so literally you could have had a 0.6 pip stop. Now, I'd never, ever, ever trade with that small amount of a stop, ever. It's just not how I can do it. My broker would have just taken me in and taken me out, like just instantly. So I can't do it on this, but maybe in futures, we could do something like this, okay, in the futures markets. But look at this, a 25% risk reward right there. One of the best trades that would have been, right? So if we could actually get these tight stops, tight entries and tight stops, would be initiating for prices up here. Now, the astute amongst us will be saying, well, actually, it took us out. And you're absolutely right, because there's actually another golden opportunity coming up. I believe it's right here, which gives us an even better risk reward, 27.5, right? So let's go talk about that. So as we're initiating prices up here, again, we're getting, we're not mitigating anything really that important. You could actually say this is a transitional order block mitigation, but is it really? It's definitely mitigating wick. So it's like a weak kind of an entry. But the reason you might be interested in taking this kind of an entry right here is because we are initiating fast and furious away. And so it's about like looking at, well, what have you mitigated? We've mitigated this. It's a trade that could have worked out, sort of not half-assed, but it's more like not high probability. So they do one and then they do two. This was, I believe, an actual trade I did take. I left the arrow on this one, meaning like, yeah, I actually did take that trade and got spanked out, right? Price comes back in. And this was, again, I didn't understand this part right here. Why would we come just below here and not initiate away? Well, if you actually see, you see how with structure, we've got, say, structure low, structure high. And then we've come down to mitigate the low end of this piece right here, right? Piece of order block. We've initiated away, but we haven't broken structure. We don't break until until over here. And so even though we've gotten this fantastic, wonderful entry over here, and we think price is going to go to the moon, it cannot even break its own structure up here, and that means that this is still playable. Right? And if I was looking for it, I would have been looking for it, And the reason I wasn't looking for it is because of this guy. It messed me up. It didn't give me the connection between buy primary and buy primary. Instead, it left me hanging, thinking something weird was going on. I just didn't understand it. So that's the reason price comes back down here. But again, there's no initiation pattern, right? Just like over here. No problem. There doesn't always have to be. You can just mark it out on your charts as a mitigation, right? Because it's like your understanding of price and what it's doing. That's important. Then we get this entry mode will appear as they're about to initiate prices higher, transitional order block again. So it's a no entry for us. Good job. We would have gotten, break even or something, unless we were going for smaller targets. Price comes up, breaks structure, and then so now our understanding is getting better. Yes, we've had an initiation. We expect somewhere down here to hold. It could be a buy primary. And so then we look again, we're looking just for entry modals. We get this sell primary form, takes liquidity from over here, gets this buy primary form right in the right area, the mitigation. And then we're left with this little area here where we expect price not to transact in for very long because we're expecting this to become a wick. The moment it breaks structure, the moment it's out of here, we can start entering. And of course, because this is so big, the trade idea would have looked a bit like this: 4 pip stop, going for a break structure, 3R. And so instead of that, just wait and get a smaller entry on the lower time frame. Let's clean this up. And so on I think this is 15 seconds, same thing happens again. Let's talk about this one. Okay, so we've got this range here, okay, which is going to be a short range. So they range, they initiate, they break structure, and as they break structure, they add liquidity. All right. Next thing that happens. Oh shit, where is it? 15 seconds. Sorry, went one too far. Okay, next thing that happens. So we understand that and why it's drawn on like that. Next thing that happens: range, initiation, break of structure. It only just took it, just by a tick, but it takes it. Range, initiation, break of structure. What did that do? Adds liquidity. So now we understand these two boxes. Okay, 1 and 2. So what's this? So as price comes back up over here, taking the liquidity from this area, that becomes a sell primary, breaks on itself. We're looking for it to break swing structure, right? That's the next thing to break before it's activated, before we can short it, right? So that doesn't happen. Instead, a buy primary is potentially forming. And we know a buy primary is potentially forming because we see its unwillingness to want to transact in this area, this small area. And the mitigation makes sense for a continuation of higher prices. So as price comes down here, it creates this little area of interest. Price breaks up on itself, shows an unwillingness to want to be in and around this area. I would wait for a break of structure personally, but you don't have to. But there's the break of structure, and you could have entered. As soon as that broke structure, you could have just entered right there. I mean, this is a not five, half a pip stop, for crying out loud, right? And where are we going? Swing high. That's our target. Our target was the most recent swing high. And of course, what happens? It goes to the moon. And this would have been like a casual, calm trade at 12:30 in the afternoon. No great liquidity sweeps and big things going on like that. The difference is, the reason we wouldn't be wanting to take that one is really the liquidity, the spreads just go so large. Like even if we pulled down to here, I'd be out for sure. At this sort of hour, my spreads are definitely large during Asia. And so again, they give us another entry here for a 12-hour take profit potential. So anyway, I just want to talk about that. All of those trades were missed because of that one piece of misunderstanding from myself. So not mad at it. Glad I caught it, and we got some really good information there. So, take a breath. Take a small sip of drink here. Now let's talk about today's activity. Took a bunch of sells, nothing worked out except for my last one here. Buys weren't really happening today, to be quite honest with you. I understood them, but it was just I wasn't really able to get anything of value going with it. It didn't make sense to me. It was like pretty much like yesterday. We had this complex range once again, and I missed the best trade of the day, which was here. I think this was the best trade of the day, and I missed it. I was doing something in the kitchen, and so missed opportunity is what it is. And so I'm not super mad at it. What I would be saying here is that all of my understanding up to that point was excellent. I really understood what was going on, and I didn't enter because there was no entry modal that came in. And you know what? The only entry modal sort of area I would have really wanted to get in on would have been sort of somewhere around here, and maybe I could have like entered something around there. right, and gone for my 10R from there. But then you're sat on your hands. Look at how long it takes. So this would have actually been the best trade by far, the one over here. I wonder if I should even talk about all of this in the complex range. I wonder if it's even helpful, because it is literally just having to watch for buy primaries. I mean, on the buy side of things, right? We're watching all time for buy primaries. We're watching for liquidity grabs. We're watching for deep mitigations, the area of mitigation, transitional order blocks, all of the rest of it, and it's like kind of intensive to go through it. And while I'm absolutely happy to do it, I just don't know if it's of any benefit to go through a complex range like this, versus say looking at like talking about trades like this one. So I think what I'll do is we'll skip the buy side, and skip my understanding of that, all except for this one trade. I do want to talk about this, and I'll do that right now. And then we're going to talk straight away about just all the sells that I took, and yeah. So we're going to just ignore the buy side complex range. We'll talk about this one. So as you can see, we've created a buy primary right here. It's broke on itself. Okay, now I'm expecting it to break swing structure, right, before it can activate. And I understand that. And this could be swing structure here. So that's kind of an interesting place to be in. We've got a buy primary that has just created, but activated on itself, but it hasn't done what we thought it was going to do. It hasn't gone on to create anything just yet. And it's slow. It's very slow moving. And so we get these ranges, liquidity ranges. We get a new buy primary that comes in, breaks structure, and then they use it as liquidity, right? And so then we get a deep mitigation down here. And I even write this over this one. It's a deep mitigation, blah 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 blah. Basically, it's just them building their book, their book long on this instance. And so as we can see, we've gotten a deep mitigation. We understand the deep mitigation over here on this buy primary. We're initiating prices again. We've broken structure. Here's a range, initiation, a break of structure. This is absolutely valid for liquidity. Here's a buy primary that comes in, takes that liquidity, breaks on itself, and breaks structure. And at that point, I should have been interested in looking in this. And like I said, I just didn't catch on to this one. I was busy doing other things, and that's my own fault. If I'm trading, I should be trading. I should not be faffing around in the kitchen and doing other bits and pieces. But hey, a man's got to eat, a man's thirsty and whatnot, and things happen. I'm not going to beat myself up at all for missing a singular trade. Like that's absolutely nothing. You know. So by primary that we understand, this is the last known range in that we understand, and then we get this formation occur. So it's literally just an entry modal formation that occurs right in the right area, right? So we get a range, an initiation, a break of structure. We're concluding that low there was structure. It's very liberal understanding. This comes up, takes the liquidity that was just created by breaking structure down here, right? So there's the liquidity grabs that we needed, both sides of the liquidity grab we need, buy side and sell side, and then they do the sell primary that pushes down, actually does activate, right? If you think about it, but we're actually thinking here's where it should be. So it's broken on itself, but here's the next structure. And I guess you could have actually said, well, this is actually the structure that we needed. So again, liberal understanding doesn't really matter though, because it worked out great on this one. Buy primary comes in, boom, puts in, and then this slither of price action is left. Is left literally just waiting, right? We're just waiting to see, are you going to become anything? And then here we have the breaking structure. So as soon as they initiate out breaking structure, I think I'm going to start adding this into my entry modal, is that we need to see some sort of change of character. MS, break of structure, candle break, whatever. It has to be. You have to have some sort of reason to want to to get out of there, or to get in there, I should say. Break structure, boom, come straight back for a retest on that slither. Could have taken a 1.5 pip. Boom, boom, boom. Couple of seconds later, literally, that trade would have worked out so nice. So yeah, I missed it. A little frustrated with myself that I'd missed it, but I'm really not beating myself up about it. Okay, so let's now move on to my sells. and we'll end the video on the 10R that I took. Okay, let's just go shoot straight to 15 seconds. That's 15 seconds all day, really. Wasn't really too interested in the 1 minute chart too much. There's literally no point. I can sort of expand my eyes enough now to understand like what a 1 minute chart looks like. So, okay, let's talk about this first one. Oh, excuse me. Okay, so we create a sell primary, right? It's lower time frame, but we create a sell primary. Price is moving down. Price is aggressively moving down, I should say as well. So anytime we create a sell primary, we want to see what happens when we get to it. Okay. And so what happened when we got to this sell primary is we did the entry modal. Okay. We took liquidity from the high. Right here was actually the liquidity stacking right there. So we actually did take liquidity from the high, creating a potential buy primary. Right now, in hindsight, I'm looking at this now going, why am I taking this kind of a trade here? This is what I used as the buy primary. So this is the buy primary. So I'm using this as the liquidity, right? Which isn't very much liquidity, really. It's just come up, come down, hasn't taken anything. So anyway, I was using that as the buy primary. I used this. I beg your pardon. Have I got them reverse? Yeah, I'm drawing them reverse. Let's see here. What did I see? What did I see? That's the question. Okay, maybe it was this. I don't know why I haven't got it drawn on. I think I got rid of it because I needed to see my chart cleaner at the time. Let's just say that was the buy primary and that's the sell primary. I think it must have been something like this. Buy primary, sell primary, had the sliver, became wick, entered. You know what? Looking at this, crappy trade. Stay out of it. My understanding was I can't even recreate my understanding here. Okay, it must have been something like this: the buy primary, the sell primary was potentially forming. Here's that slither. You should be waiting for like a break of structure, like down here. But the liquidity grab is weak on this one, so that's why I'm saying sort of stay out of it. Anyway, entered literally right here for whatever reasons, got stopped out. No big deal. -1R. Then we start creating this new potential sell primary, but it's a transitional, so I'm not interested in it. Right. So I was thinking about getting involved, but it's a transitional stop, meaning it mitigated through price and mitigated over here. That almost always becomes cause when they do that. And so I wasn't interested. But again, they did give us the entry modal, which was looking quite nice. Then we get this higher time frame sell primary. Boom, takes the liquidity. Right, we got this range here. Range initiation break structure puts liquidity above here, and what's going on here is this was a primary. So they took out a primary, so that's a bullish activity. But what happens? They break on themselves, and we're expecting them to break major structure. So I'm looking for continuation shorts because I'm thinking to myself, damn, man, we just put in the sell primary. That's badass, right? Now, in hindsight, we can see that it was actually just to build prices higher. But at the time, this was a good understanding. So we broke structure here. Yes, it's not been activated. You could say that one of these was activation, but it's really just down here is the activation at the swing. And so I'm looking just to see what could be going on. So from this A to this B to this C leg, remember the C leg is where price actually breaks on this. We look back at between A and C, B and C, and see what happens. This is the last known range that we had. And so I'm very interested in this last known range. I'm thinking to myself, well, if we come back up here or create an entry modal around here, I want in. Sure enough, we take liquidity from the buy side and we take liquidity from the sell side, and sure enough, it creates this entry modal. It's still too big, right? So we've got the buy primary, the sell primary, and this is the entry modal. Excuse me. Then they do it on a lower time frame. They take the liquidity from down here, they take it from up here, and then give us an entry. So I enter here, right? Now in hindsight, that this wasn't enough of a liquidity grab, so this trade should never have happened, right? But I'm eager to get in. You can feel it, can't you? I've got a sell primary. It's just broken. I want to get in. Here's a last known range, location. This is ticking all the location boxes. And remember, this still hasn't broken, so this still hasn't activated. So it's like we're trading off of a sell primary that hasn't activated. Number one, the location is fantastic, and they give us a sell pattern. So I take it, and I get an initiation. And then down here, so this is going to get a little tricky because there's another entry here. But suffice it to say, just sort of keep with me on this trade here. So we're short right here, and then I see, ignore the drawings. Just imagine this was the last drawing on the chart. Ignore these future ones. On the 1 second, right? I'm short. We come down as far as here. Price builds up, and then on the 1 second, I see this one. Boom. This 1 second flash candle. And I write 1 second flash. And literally, this is what price looked like for me. And 1 second flash means what? Look what I did. I put a liquidity symbol right below. Because I've seen this over and over again. All it means is that price will take out this low. Whenever I've seen these 1 second flashes, all it means is that it will take out the low of wherever it flashed to. It doesn't mean it's going to continue in the direction. It doesn't mean it doesn't mean anything really. And I've seen them in my direction. I've seen them against me. I've seen them not do this, but most of the time when you see a 1 second flash, it's going to become cause. Sure enough, I'm like, oh, it's not going to become cause, and then it does. So what happened on this one is we got that 1 second flash. I'm trying to remember why I would be in this trade. It doesn't look like, maybe I must have gone break even on this one, 2.5 pip stop. I must have on the breaker structure here, maybe. Or maybe down here. Yeah, by the time we're down here, I've gone break even. That's what happened. And that's why I got stopped out. Even with that 1 second flash, I'm still comfortable with my stop where it was. They come out, take me out. And yet, because that flash, I'm able to enter in again, right? I'm thinking to myself, well, look, here's a buy primary range right here. Range, initiation, break of structure. So that ticks all the boxes. So this becomes a buy primary. The buy primary needs to take out swing structure. It can't. So they take out this sell structure. And in here, we've got this range, initiation, break of structure as well. So this is actually a really good one. Really good liquidity entry. So here's that range initiation. Here's the break of structure right here for the short. And then we're left with this piece of price action that they're unwilling to transact into. Boom, look at that entry. Look at that entry. That is such a good entry. So 1.5 pip comes right back to the liquidity, takes me in, or puts me back in, and then we take out that 1 second flash. So I'm thinking, oh my God, I'm sitting pretty. I'm the king of all kings. I'm the trader of all traders. No one can trade better than me. Boom, I'm out. I get taken right there. So another break even, because as soon as we push this far down, I'm BE. I've got no reason for price to come back up here. And so there was my all my sells except bar one for the day, and then we have all this buying activity again. I'm not really at the screen too much during this until let's go 1 minute. Let's go on the 1 minute chart. Let's bring them both up until this happens, right? Actually, here's on the buy side. So something I noticed on the buy side earlier on was that we had this sell primary turn into a buy primary, and you can see I've done the little squiggly drawing hand thing, hand drawing tool to represent that this was a handoff between a buy primary from a buy primary into a sell primary, and or vice versa, I should say, right? A sell primary hands off into becomes a buy primary, so they sort of hand them over. And when they handed over, I was thinking, well, this range really didn't get much of a mitigation, right? Number one, it didn't get much of a mitigation. Yeah, mitigated, pulled through a little bit of time, but this is a buy primary. Buy primaries don't just get like a little bit of mitigation; they get a lot of bit of mitigation. So what the heck's going on with this? And let's do my notifications off just for a little bit longer. And so as I see this and they push through it, this becomes transitional. And so there's my transitional in here. And let's go to the other side of the charts now. So you can see why I was thinking this range would be would hold. Really, this is what I thought would happen. I really thought this yes, it's a transitional, but it's a biprimary transitional or cell primary. It's both. It got handed over. So this is like where there's definite interest is really what I was seeing, and I didn't think we needed to touch a cell primary or anything else. And so as I see us get up to here, I see the mitigation and whatnot, and I'm thinking to myself, okay, let's just see if they can't give us an entry. If they can give me an entry, I'm in. Right? But I want it to be a liquidity grab as well. I definitely want to see liquidity taken. So here we've got a range initiation break of structure. It adds liquidity. They then come down, take that liquidity, and initiate on themselves, creating a biprimary. Here's the biprimary. For the biprimary to activate, it has to come up above this line, swing structure. It doesn't. Instead, what happens is they create a cell primary, meaning that this now, because of, you could even say just even this bar here, range initiation break of structure. Here's structure right there. It's hard to see, but there is structure right there. And because of that, we have created a cell structure in here. Oh, sorry, beg pardon. We were over here. And look at the mitigation point. So it mitigates here. And so what we're looking for is an unwillingness to transact in here. We want this to become wick. Sure enough, it does. The moment it breaks structure, I'm interested. Here's that break of structure. So now I'm interested in shorting this. And I had a limit order right here. I think it was 2.5 pip stop, I think I did on this one. A limit order 2.5, something like that. Never came in, right? So price starts initiating away, and I'm not giving up. I'm observing it. So what's this? Range, initiation, break of structure. This comes in to take the liquidity, breaks up on itself, right? And here's what was interesting. I had this drawn like this for the most part, and what as price was over here, I suddenly realized, I go, what if they're just going to mitigate this range? And so where would have been the this pullback? You know, like what was the last known range that took liquidity from here? And then I start to see this one because we had this sort of stopping point in here. And so I'm thinking to myself, well, that leaves a nice little area of mitigation. Let's see if they do it. Right? Cell primary forms, comes up, shows me an unwillingness to transact in and around this sort of mauve box. And it wasn't until I'm not willing to take it without a break in structure, right? Break of structure right there. You could have concluded right here was structure. Here was structure. Wherever you want to do call structure, I considered that structure. So I entered immediately as soon as price bobbed back up. And I've got like I said, I think I explained this one already. I had a 1.5 pip stop. The fill was just whatever. I got a lower fill, I think it was. And so it made it as a 1.8 pip stop, kept the risk to reward as at 10R, meaning I entered with the exact same amount of units that I would have entered if I was a 1.5 pip stop. And so that's exactly how we ended the day. It just took me out here for a full 10-hour profit on that one. So a bunch of break evens, couple of losses, I think there was, and a couple of losses, couple of break evens, and then this short here. So all in all, not a bad day at all. Following my understanding is pretty good. I think the thing I'm really wanting to do more of than less of right now is to wait for actual liquidity grabs on my entry modals and to wait for them to be like real good setups. I think that's the thing. I get a little bored waiting, a little complacent, and I just want to be in the market. I really love trading. I love everything about it. I'm eager to get in the market, eager to make money, eager to do all the rest of it. And so it's hard for me to sit on my hands, but alas, I'm getting better at that. and I will get better and better and better, and I will absolutely be the freaking king of all this shit. You know, this is what I absolutely love doing all the time. I'm not trying to be the best of the best. I just want to be really fucking good because I put so much time into this. Not only because of that, but this is my thing. This is my passion. This is what I love to do. It's what I love to talk about. And this is what I want to talk about all the time, all day, every day. Anywho, there we go, you guys. There's my trading on the day. Hope you guys are crushing it, smashing it, having the absolute best experience of your lives, doing what you want to do, living your best life, making a shit ton of money doing it. I wish you absolutely the best possible day, and I will catch you on the next one. Aloha and peace out.